What's going on, everyone? So the dip buys have worked, haven't they? All of these dips that I've been buying clearly worked out, right? To all the bears that were thinking we were going to fall down to 408 or 414, whatever those levels are all the way down here, right? That clearly didn't work out. And I'm not going to make fun of anyone, but what we need to understand is that in the past year and a half, we've been in a ridiculous uptrend. The uptrend was not fueled by retail traders. It was fueled by the fact that the Fed is buying back hundreds of billions of dollars worth of securities every single month. So every single time we've had a huge dip, every single bear has been like, oh my god, that's it, that's the top of the market, we're falling, blah, blah, blah. But you guys have to understand is the definition of insanity is doing the same thing and expecting a different result. All throughout, every single time this has happened, the Fed policy hasn't really changed. We haven't been increasing interest rates. There hasn't been any news about asset purchases stopping, right? There were news about, potential stoppages in the future, but currently, in the now, that's not what's happening. So please, moving forward, the only way to learn from your mistakes is if you accept the fact that you're wrong. And that sometimes is the toughest pill to swallow, because people attach their entire personality to always being right about everything. And if, for example, they're wrong about something, then it shatters them. And it's just like, oh my god, I'm so stupid, I'm a failure, I'm this and that. No, you have to understand that trading, not everyone is right all the time. You understand? Like, it's not a big deal to be wrong. But would you rather be wrong and make money, or would you rather be wrong and lose all of your money every single time something like this happens? So it's not worth it. Just accept the fact that you're wrong, learn from your mistakes, because at the end of the day, mistakes and losses are just beautiful lessons. So yeah, please, there's my service announcement. I'm gonna go over the stock market, the crypto market, and the bond market. Please make sure to subscribe, put on post notifications, do all that good stuff, and let's get started with the video. All right, number one, clearly the SPY broke out of the inverted head and shoulders pattern that I was sharing. It's a very, very bullish pattern, and worked out perfectly. All of the calls that we were buying this entire time, all of the bottoms that we caught, worked out beautifully. Now, the SPY is at the upper level of the Bollinger Band, and usually that acts as resistance, because especially when there's a extreme move to the upside. So the main levels of resistance for the SPY are going to be 447.55. What might end up happening is we could potentially open higher, right? But this is a very, very important level of resistance. What I do think is going to happen on the SPY is we will come back and retest 443, which is another important level of support, and then potentially come back, and the next level of support would be 440.50. So 440.50 is this blue uptrend channel line that we've also been monitoring. So those are the levels on the SPY. But clearly what really matters is the 30-year bond. So let's go ahead and take a look at that. Alrighty, so the 30-year bond. Okay, so clearly we were very, very red on Friday, right? But the NASDAQ was green. So usually what happens on these days is that the 30-year bond does tend to act with a 1-day lag. So if we've, this has been working out perfectly the past few times this happened. So when the 30-year bond is going down, the NASDAQ should also be going down. We can see that it failed at the 20 exponential moving average right here, and it also failed to cross above key levels of resistance. And now the 30-year bond is extremely overbought to the upside on the MACD, and it made so much movement on the RSI, yet very little headway in terms of breaking above resistance. So the 30-year bond does not look bullish at all, but the NASDAQ does. So usually when that happens, it's a signal that the next day the NASDAQ is going to be red and it's going to fall. So that is my thesis, and that's been working out beautifully the past few times. So we need to see if the NASDAQ is going to be very, very red tomorrow. So yeah, that's essentially it on the 30-year bond. We were red, but now essentially, you know, if the one caveat is that if the 30-year bond does not force weakness out of the NASDAQ and the NASDAQ continues going up, then we're going to need to see the 30-year bond break below this level of support. If we break below this level of support and the NASDAQ still does not respond, then that would mean that the correlation between the 30-year bond and the NASDAQ is not as strong anymore. And then we would need to see if we cross below this level of support. But if we don't show any sort of correlation between this fail and this break, then, you know, in the short term, it just means that stocks are only going up. So we'll have to see and monitor this day to day. And see, like, this is me like being wrong potentially, right? There's nothing wrong with it. You can easily be wrong, but it's a matter of learning and adapting. The market is dynamic. It's not a static thing where, okay, this rule is going to work forever. And if I learned this and it worked in 2017, it's definitely going to work in 2021. No, it's not the case. Okay. Anyway, there's a 30-year bond. Let's go ahead and take a look at the NASDAQ. So the NASDAQ, clearly very, very strong. The MACD, very, very strong. The RSI, extremely strong. We closed above the 50% fib level. So the closest level of support is going to be 366.55. We can see it's very, very green today. It's much further away from the upper level of the B band as, you know, the SPY was touching it. So similar to the, you know, Ethereum and Bitcoin, the NASDAQ has some space to catch up to the SPY, right? Similar to Ethereum and Bitcoin. So the levels of support are going to be this 38.2% fib level at 362.72, the 20 exponential moving average at 363. The resistance is going to be 370.38. So as long as the 30-year bond continues to show this much strength, then, you know, show this much weakness, then it's not a good sign that the NASDAQ will continue going up. But yeah, essentially, there's the analysis on the NASDAQ. Let's go ahead and take a look at the IWM. You'll get a much better picture of the Bollinger Bands with this. So the Bollinger Band, all right, so we opened outside of the upper level of the B band, which is one standard deviation away from the mean, right? Which is the 20 exponential moving average here. You can see that we opened at 228, very, very important level of resistance on the IWM, and we failed to break that right at the open, and basically we fell for the rest of the day. And towards the last hour, we specifically fell much, much harder because all of the money was flowing out of the IWM into the NASDAQ, because the NASDAQ has so much more room to the upside, but the IWM was already trading over here, essentially the equivalent of that price, right? So that's why there was no point of putting more money into a stock that was already technically overextended, because algorithmically, when a stock is trading that far outside of the upper or the lower standard deviation on the Bollinger Band, it is a very, very high risk reward trade that the price of the stock wants to return back inside. Okay, so for the IWM, the levels of support are going to be this 224 level, obviously, right? And then this very important uptrend channel line that we've been monitoring here at 222.75. The levels of resistance are the same at 228. So there's the analysis on the IWM. My thesis is tomorrow we could be in for a red day because the 30-year bond is weak and there's usually a lag time. But yeah, we have to see if tomorrow the NASDAQ is going to be red, and that would mean the SPY would potentially be red as well. So there's my analysis on the stock market. Let's go ahead and take a look at the crypto market. Okay, so Bitcoin, we broke above 56,700, we broke above 59,000, and now we're trading in the 60s. The next level of resistance is going to be the all-time high at 65,000. One thing that I want to look at is in the technical standpoint on the MACD. Bitcoin looks extremely, extremely strong. So we didn't even we barely crossed above here, but we've been breaking through so many levels of resistance without giving any sort of clear pullback. There hasn't been a healthy pullback at all which means that this is purely institutional driven. This is a purely institutional driven move. Yeah, it means that this move can just continue going on higher. What most likely should end up happening is we will come back and retest this 59,000 level, consolidate a bit here, because this is not a level people want to go long against. We want to come back to 59,000 and maybe even come back down to 57,500. But once that happens, then, you know, we can continue on higher into the end of the year and early next year, Q1 of 2022. I believe Bitcoin should at least be in like 80,000, or it should have at least touched 90,000 at least. So yeah, there is that analysis on Bitcoin. You can see Ethereum is still trading much further away. So as Ethereum is in between the 786 and the 1 fib level, right? Bitcoin is trading all the way up here above the 168, right? So Bitcoin, you can see it's trading above the 168 here, and Ethereum, it's still trading below down here. So, you know, in conjunction, Ethereum still has potentially another $1,000 to catch up to Bitcoin. And that's a really, really good sign for Ethereum. That's a really good sign for the entire crypto market, that things are just moving up in such a bullish way. And yeah, there's my analysis on the stock market. There's my analysis on the crypto markets. I hope you guys enjoyed the video. Make sure to comment, like, subscribe, put on post notifications, and do all that good stuff. All right, I will see you guys tomorrow. Thank you. Have an amazing day.